Welcome everybody to the Chinchilla Pickin' Podcast. It is February the 24th, 2024 at 2:04 p.m. That's a lot of twos and fours. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only, the Baron of Bonds, Brandon Beaver. Brandon, how are you?
Doing all right. How about you?
I'm doing well. I'm doing well. Got a lot of stuff done so far today. Got still more stuff to do. Enjoying February. Not too cold for Cincinnati, but it has had its cold moments. So
Well, yeah, and it's been, normal Ohio weather. So we were nearing 70 degrees last week. Now we're at 35, 36 degrees for the high today. We're going to go back up into the 60s mid next week and then come right back down again. So,
yep, back and forth, back and forth. We live it. We love it. We're still here.
I don't know
I
about
don't know
that.
if we love it. I mean,
Yeah, I don't know about that.
yeah, never mind. Retract that statement. Nope, nothing big happening in sports news that I'm aware of this week. I mean, got the Olympics coming up. That's gonna be a fun thing to cover. Paris is still riddled with bed bugs, as they've had a surge in that last year. So I don't know what they're trying to do with the Olympics coming to town.
I don't know.
Did you
I can
even
tell
know
you
the
what,
Olympics were this year and that they were in Paris?
no, I didn't know. I had no idea.
The
I
look
didn't.
on your face just now told me that.
Um, I've been to quite a few countries in Europe and Asia and here in the Americas with Canada and the United States, obviously. And I'm not trying to insult anybody when I say this. There were some really, really, really awesome places that I visited in Europe. Amsterdam actually was surprisingly my favorite. London was great. Paris is the most dirty city I've ever seen in my life.
Well, hopefully they clean it up for the Olympics.
Yeah.
We'll see. It is an old city though, but so is London. London's old too. So
Yeah, it's very old.
yeah. All right. Well, let's talk about stock news and investments, shall we? Let's talk about
Sure.
that. Yeah, right. That's why people are listening. Um, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You actually hear the live back and forth right here on the show. Brandon's going to take it away with his favorite subject of his favorite stock holding.
Berkshire Hathaway, pry it from my cold dead hands.
Right?
Well, the earnings were released today, and so was the annual letter. They posted operating earnings, and this is what Buffett prefers to look at. And this is profits from businesses across insurance, railroads, and utilities. That was $8.481 billion for the fourth quarter. Operating earnings for the year rose to $37.35 billion in 2023. This was up 17% from the prior year. Berkshire has now a record $167.6 billion in cash. This is a record level. It surpasses the $157.2 billion that the conglomerate held in the prior quarter. So they just continue to stack the cash right now. Waiting
I
for
mean,
the
you could
next.
buy a portion of the video with that.
In his annual letter, he talked about Charlie, who passed away in November of last year, Charlie Munger. He said that in 1965, Charlie once advised him, Warren, forget about buying another company like Berkshire. Now that you're in control of Berkshire, add to it wonderful businesses purchased at fair prices. Give up on buying fair businesses at wonderful prices. So, in other words, abandon everything that you learned from your hero, Ben Graham. That's what Ben Graham had the cigar theory. You find a decent company that's priced terribly, you can get one or two puffs out of that cigar before it goes away, and you make your money and you move on. Charlie Munger was advising Warren Buffett at this point in time to let go of that ideology. He also talked about a sister. He said, and this is going to be an interesting one to bring up to you, Dave, given my aversion to CNBC. But he said she is sensible, very sensible, instinctively knowing that pundits should always be ignored. After all, if she could reliably predict tomorrow's winners, would she freely share the valuable insights and thereby increase competitive buying? That would be like finding gold and then handing a map to the neighbors showing its location. He calls her Birdie. Her name's Berta, but he calls her Birdie. Understands the power for good and bad for incentives, the weakness of humans, the tells that can be recognized when observing human behavior. She knows who is selling and who can be trusted. In short, she's nobody's fool. What do you think about that comment?
Look, man, it all depends on your intentions and your mission, if you will, your mission statement. So if your mission statement is to help people be educated and try to help people make as much money as possible because you want everyone to make money, such as chinchilla picking, then yes, we will freely give out that map to that gold as best we can. But if you are an investment bank and you're just trying to make the money, you're not going to tell your neighbors how you're doing it because you want to make as much as possible. So your intent has a lot to do with it. As far as pundits go, I get what you're saying about the pundits on CNBC, and the analysts are just talking heads sometimes. And but I like new people to watch CNBC so they can see how terminology is used in real time, to see how real time news affects stocks in the moment, and it's good for those purposes. And it's good if you are attempting to day trade. Um, you need that real time news as it happens so you can make moves effectively. However, we both agree that most new people should not be day trading.
Most new people should not be day trading, and the emotions and the illogical arguments that will be presented on a daily basis can be poisonous to a new mind in the stock market.
Yeah, for somewhat, I think. You
Yeah,
think more than I do, but we disagree on that, but somewhat,
and we're not going to gain any listeners by me telling people to turn us off. So
right?
but if I ever had the idea that this show was powerful enough to move the markets in any way, I would be extremely delusional. So
I was using it as an example,
yeah, but there's no incentive one way or the other for our show, if we were dishonest people even, to lie to the people that listen to the show. There's no
Yeah.
incentive there whatsoever. There may be on CNBC, although I'm not convinced that they move the markets that much anymore either, because the markets in the United States have just become so big since even the 2008 election. I don't think that what Jim Cramer says on air even matters anymore that much.
Yeah, but I mean, yeah. I would give you that. And a lot of it's a lot of computer trading as well, that there's no people behind the buttons even, so.
Which is just as easy if you are a savvy long-term investor or even a savvy day trader. It's just as easy to take advantage of those computers and their mistakes as it was to take advantage of the people that were making the mistakes years and years ago. You just have to be quicker with it these days.
Yep.
All right.
Yep.
So operating for the earnings for the previous 3 years, starting in 2021, $27.6 billion, $30.9 billion for 2022, $37.4 billion for 2023. So nice growth there for the short term. He reiterates here that net earnings are useless. He says the primary difference between net earnings, which are the mandated figures, and the one that Berkshire prefers is that we exclude unrealized capital gains or losses that at times can exceed $5 billion a day. So if you're
So
tracking,
they don't include that in their earnings, or they don't look for that in companies' earnings. Like,
so-
which one are we
so
talking about?
I don't think they look for it that much in companies' earnings. They did not include it in their own earnings until 2018 when it was required of them to include it. So now it's
Yeah, and
required.
I don't think you sorry, I don't think you should include that in earnings because it's unrealized gains, and that could slip away very easily and quickly if you haven't sold and realized those gains.
Yeah,
So yeah, to me, it's like you should not be included, not until you actually sell and take your profit.
So I think it was 2020, the year of COVID, I believe it was. If you would have just looked at the net earnings for the company, it would have been negative $30 billion and not the
Right.
operating.
Yeah.
So
I mean, that's a big difference.
yeah. So he starts talking about like kind of the casino mentality of the market these days. And he says, I can't remember a period since March 11th, 1942, the date of his first stock purchase, that he has not had a majority of his net worth in equities. And so far, so good. He said the Dow Jones Industrial Average fell below $100 on that first day that he invested in it. And that's when he pulled the trigger. He was down about $5 by the time school was out. Soon he said things turned around, and now that the index hovers around $38,000 or 38,000 points, America has been a terrific country for investors. All they've needed to do is sit quietly and listen to no one. So kind of going back to that, turn off the pundits.
Yeah, I mean, I get why he says it. Yes, turn off the pundits. Um, and don't there is a lot of noise out there. I'll put it this way. It's a lot of noise out there and a lot of bad information, right?
Yeah.
And a lot of people just trying to nowadays you can make money by having viewers, subscribers, and so you're just trying to be hyper, blowing things up beyond what they need to be blown up for your TikTok or for your Instagram or what have you. Especially on TikTok, you always see people out there with charts behind them saying, look at this. This is what we could have done together." I'm like, what, you didn't show me a week ago where you actually bought that.
Yeah.
You're just showing me a chart after it's gone up. You didn't buy that.
Right.
You're claiming that you knew this ahead of time. You didn't. You're a liar. And
Right.
most of them
Or
are liars, and I have no respect for them. But yeah, you see a lot of the noise out there is what I'll call it, not pundits. I'll call it noise, and you have to learn how to filter the noise, and that's what our mission is. How do we teach people how to filter the noise so they know what's good information and what's bad information? And I just the only thing I would say to that, Brandon, is if you don't know, then don't listen to it at all.
yeah, that's kind of my thought on it too. And there's been a number of pundits that I've noticed on the networks, that maybe 15 years ago they were telling you to buy Nvidia, and then now they're saying, well, 15 years ago I told you to buy Nvidia, but you don't pay attention to the fact that they told you to sell at its lows multiple times throughout the past 15 years, and then buy back in again at the highs, and then sell again, and such. Um, and he's arguing here in this quote, he's arguing kind of against what we know as FOMO. He doesn't use those words, but he's arguing against it. He said that if he's missed one, and he's missed plenty opportunities here, another always comes along.
Yeah, I mean you don't want to chase the dragon, as we call it on this show. A stock has already moved up. It's now beyond what the valuation was good at, and so now you're like, well, it's going to continue, right? So I should buy in. Chasing a dragon, fear of missing out, whatever you want to call it. Yeah, it's not a good strategy to have if you haven't done your research.
Right. He said Berkshire has now by far the largest generally accepted practice net worth, a gap net worth, recorded by any American business. Record operating income and a strong stock market led to a year-end figure of $561 billion. Yeah.
That is nice. How much are their dividends? That's why I always like hearing is like the billions of dollars Berkshire Hathaway gets in dividends each year.
Yeah, I was going to say they get the dividends, but they don't actually pay dividends out to shareholders of Berkshire. They repurchase shares, which is what
Yeah.
Buffett to do. But a lot of that, Occidental Petroleum, which he addressed that in the letter. Dave, you're actually gonna, if you want to read about Occidental Petroleum, there he talks a lot about oil, which I don't quite understand, so I'm not bringing it up on the show. But there's a lot of it in the letter, so if you're interested.
Yeah,
Uh,
I might have to read the letter now. I knew you were going to cover this, so I didn't read the letter at all. I was going to allow you to bring me the information for us to discuss, but go ahead, keep going.
He said outside the United States, there are essentially no candidates that are meaningful options for capital deployment currently at Berkshire. He does currently own 5 Japanese stocks, though. Or
Okay, so he's already invested in the ones he believes in.
yeah,
Got it.
yeah. So that includes Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo.
Nice.
He said, indeed, markets can and will unpredictably seize up or even vanish. And he's talking about these as opportunities. These situations are opportunities for him. Keep in mind, Berkshire has $167 billion in cash right now. They are well prepared for these kind of opportunities to arise and to come out on the other end much stronger. So, once again, indeed, markets can and will unpredictably seize up or even vanish as they did for 4 months in 1914, for a few days in 2001 after 9/11. If you believe that American investors are now more stable in the past, think back to September of 2008. Speed of communication and the wonders of technology that facilitate the instant worldwide communication also facilitate instant worldwide paralysis.
It does, and it goes. So what he's basically saying is, it's going to continue to happen these moments in time, and they're just going to happen faster and deeper because of all the instant communication. So everything's instant now. Bad boom. Some news hits the wire. Everybody starts selling, and then everybody starts talking about selling, and more selling, and more selling. The computers get involved, and they start selling, and it's going to happen faster. But those are opportunities to find great companies that didn't deserve to be sold. And I give the example back in COVID, oil dropped down to like nothing, right? This was still one of my favorite trades I've ever made. And it was ExxonMobil. And I bought an option on it that expired in November, but I bought it like for pennies. And I put a lot of money into it and ended up making a killing off of it. I ended up making close to 100 times.
Wow.
100 times what I put. Yeah, it was some outrageous number. I'll have to go back and look at my trades. But yeah, because it just by the time it got close to November, ExxonMobil was because it when I bought the option they were at like 30, they were already back up to about 80 by the time November happened. And I knew oil wasn't going to go away. Like ExxonMobil wasn't disappearing. We're not going to quit using oil just because we stopped for 1 month. So when you see the whole market crash, you look for opportunities of strong companies that didn't deserve to be hit.
Yeah, well, let me tell you something else that should get our attention, and maybe more people more intelligent than me should be paying attention to this. Just the other day, there was 5 to 6 hours, and this is not about communication and people telling other people to sell, but there were about 5 to 6 hours where about half of Americans didn't have access to a cell phone. And how many of us do trades on the stock market with our cell phones these days? Or buy
A lot of us,
yeah,
yeah.
with our cell phones. So what happens if that's a much worse problem and it turns out to be more serious? And what if it is a situation where there's a cyber attack or cyber terrorism or whatever, and it takes out our communication for a week? Even if half of Americans lose cell phone service and the other half have it, that's still going to cause a really big problem, right? So that's something else that technology could paralyze society as far as that goes. Now that's going to be an opportunity for investors that can come home and jump on their computers and buy stock. That's going to be an opportunity for us, but that's another way, another reason that the stock market could crash sometime in the future.
Are you buying AT&T?
No,
They dropped a good amount. They
really, I
dropped
have
what,
to look at
10%?
it. I have to look at it.
Thought they dropped like 10%. Yeah, yeah. So I mean, that was an opportunity. I don't know if I would have bought it. I
Do
don't
they
really
still own
follow AT&T.
did they still own HBO, or did they sell that
No.
off?
Yeah, they sold
They did
that.
for a while. They had a stake in it at least.
Yeah, they had a stake in it. They still do they've all they own like the landlines in certain cities and internet, and so their AT&T has a lot of different parts to that company.
Yeah, there is for sure. Going on as far as the possibility of opportunities arising, not crashes, but opportunities. Today's active participants are neither more emotionally stable nor better taught than when I was in school. This is what he said. For whatever reasons, markets now exhibit far more casino like behavior than they did when I was young. The casino now resides in many homes and daily attempts the occupants. Think of Dogecoin. And by the way, that tempted me and I made money on it, but so I can't complain too much. The GameStop meme stock, frenzies all of that stuff. These are all things too that, if they infect the blue chip market and, we all overreact to the downside, savvy investors step in and take the opportunity to find the gold that's raining from the skies, so to speak.
Yeah. And it goes back to the old adage here. I feel like we're preaching here right on this episode right now. I feel like we're just sitting here preaching. But what Warren Buffett's talking about in that part of the letter is, he's talking about people nowadays, they don't want to invest and build up over time and have a stable growth and build up to millions and take a number of years to get there. That people want there tomorrow. They
Yeah.
they want to put in $50 now and then next month they're a millionaire. And it's like, there's just the chances of that happening are slim and none.
Yeah.
I'm not saying it's impossible because sure enough, somebody someday will probably find a way to do it. Luck, with majority of it luck, but I'm just saying it's slim and none, and I would not put your hopes on that. I would focus on long
Yeah.
term investment.
And then he also talked about a sister again, who supposedly, or I guess apparently is a legendary investor in her own right. And what got her to that point, when she was 46 years old, up to that point, she'd been trading stocks. She'd been trading regularly treasuries and stocks. And then she decided to, I think it was some treasuries, if I remember correctly. She kept some of those. And then she just made one move and she bought into Berkshire Hathaway finally 46 years ago. And she's done nothing ever since. She has not made a single move in the stock market ever since. And she is very rich from her own investments.
Yeah,
So,
see, if you invest wisely, I mean, you can do a lot of great things.
yeah, and for her, I mean, it was more obvious because it was her brother running an incredible company. But Warren Buffett ended the letter here saying, actually, I don't know if this was at the end, but this is the last thing I have to say about it. When you find a truly wonderful business, stick with it. Patience pays, and one wonderful business can offset the many mediocre decisions that are inevitable. His
I like it. Good words of wisdom.
his other piece of advice was to avoid permanent capital loss. So do your best to avoid serious mistakes, which would involve permanent capital loss of money. You're always going to have money that you lose, right? But then you can make the decision to move out of that losing investment and buy into something else that makes you money back. So avoid basically investments going to zero is what he's saying.
Yeah, yeah. Good advice. I like it. Brandon's not bringing much today. Good thing I got some heat coming. Got some heat coming. You ready?
You gotta find my mouse here. 1 second.
Uh-oh. He's got it.
Yeah, go ahead.
I want to say once again to our listeners, we are not the most tech savvy individuals, but we do our best. All right, here's what I got for you. So there was this lunar landing that happened earlier this week. So I was watching it all week because the stock was moving up. It was I think about a month ago. The stock was for this company was trending at around like $3, maybe $2, $3, and it was slowly moving up. And then the day of the supposed when they were meant to land, it was sitting around $9 a share. And I was watching the news on it, and then I was out to dinner with a friend of mine who he's starting to learn how to invest, and he's starting to learn different things, and we're sitting there and I was showing him, and we had our phones out, and we're watching the stock, and I said, you should probably buy some of this right now because it actually landed on the moon, and this stock, people are going to get emotional. They're going to send the sky high. You're going to make some quick money. And sure enough, so we started watching it, and it went all the way up to $12 and some odd a share. So you would have made over 30% there in about an hour if he had. But he didn't know how to do aftermarket trading. It's I get it's a new if you're new, that's hard to figure out how to do that
Yeah.
bid ask and get that right price and do it quickly. It's hard. I get it. I've done it multiple times, so for me, it's not a big deal. But stock went up, right? Private company landed a ship on the moon, had some help from NASA. We'll get into that in here in a minute, but it was all big news. Went up to like $12 a share, and I said, it's too high now because he was starting to figure it out. I said, it's too high. I think we miss it. You don't chase a dragon. It's already gone up,
Yeah.
right? So yesterday during the market, that was Thursday evening. So Friday during the course of the day. It was still went up right away. It came back down, then went right back up to about close to $12 again. And then it came down again because the CEO of this Lunar company, it's Intuitive Machines, is the name of the company. Intuitive Machines. The CEO said that it landed, but it tipped over. So it's on its side. This lander on there. So it's a 14-foot lander. They got antennas that they were intended to enable communication in the South Polar region, right? That's where NASA's looking at here. So Odysseus is the name of the lander. It's the first time a U.S. has landed in over 50 years. They wanted to target the South Pole because NASA is looking at trying to send astronauts to the South Pole of the moon for some reason. And so this lunar lander was, NASA funneled some money into it as well, just so that they could get good pictures and readings from this area of the moon. But after he announced it, the stock went right back down again. So in a swing of pretty much 72 hours, it went from like $6-7 up to 12, back down to 9, back up to 12, and then back down to where it closed at a little around $7 a share. It's crazy swings. If you're a day trader, it's a dream come true. Make quick money one way or another. Maybe if when they hit that $12 a share, you could have put a put option in and made money on Friday off of that. Who knows, man? But it was a fun thing to see. But let me talk more about Intuitive Machines and this lunar lander a little bit more. So shares of Intuitive Machines, they gained 260% this last month as the build up to this lunar landing was happening. So it was actually a good stock to own a month ago before they actually landed. So it launched from Florida just last week, took an extra lap around the moon because they were having some trouble with their guidance systems, but NASA stepped in to help them out with their guidance system with lasers that NASA had put on there for other purposes, and they were using it to help guide it in. So with that help, they took that extra lap around the moon, then they landed, but they were landed tipped over. They expected to continue operations for about 9 to 10 days, and then they don't expect it to work after that. The lunar shares ended up closing around at $6.55 after hours on Friday. So that's where it actually ended up closing at. So a bad ending to a week that was meant to be a great week for this company. I don't see, I get that NASA gave him $118 million for this. And, I'm sure there was other companies that gave him money to build this and send it there. I don't know if I would call this a failure, but I don't see a reason really cause for it to run up 260% in a month going up into.
No, that's the casino mentality we were just talking about.
Right. I don't see the viability of profits and net income from continuing to do this on the moon unless like all of a sudden we get to the moon and we find, I don't know, some rare metal that we need to continue space travel. Then okay, now it's worth it. But for right now, what they have, it's I don't know. I don't see the value in purchasing this stock right now. But it was a fun day trade, a fun thing to see.
Yeah, no value at all, in my opinion, whatsoever in buying.
I don't know about at all. You're gonna get some money from NASA and other companies to put like antennas and special things on your lander. So there is some money involved in it, but I don't think it deserved a 260% increase.
At all.
You're still with at all. You're staying there,
Still
okay?
at all. Right, until it proves otherwise, until it proves it can continue going and
Well,
maintain.
yeah. All right. So if you're listening, take a look at it. LUNR is the ticker. Intuitive Machines is the name of the company. See if you think there's any future here for further travels.
Do they have any positive earnings right now, or are they losing it? Are they losing money?
No, it's a new. Come on now, you're not what is it, profitable for your first 5 years as a company? Come on
But if
now,
you're going to
you know
go
that.
public, then maybe you should be. Amazon wasn't.
Amazon wasn't.
But how many Amazons?
Tesla wasn't profitable for years.
How many Amazons and Teslas though are there? This is why I stayed away from Amazon. But you could look back and say that was a mistake. But how many other companies have I stayed away from, and other people, and Warren Buffett, for example, stayed away from that would have went to zero? You know what I mean?
Was Meta profitable first?
No, it wasn't.
So I mean, you're not profitable when you first start.
Yeah, but if you're an investor, you're kind of taking a shot in the dark if you're going to go long on one of these companies. A lot of the times, not all the time, but a lot of the times, you're taking a shot in the dark, and oftentimes you miss.
All right, fair enough. Fair enough. All right, so let's go in here. Next story I have for you, Brandon. This one's kind of interesting, and I don't really fully understand it myself, but I want to put this out here as something for people to think about, right?
Mhm.
So this came across Bazinga. It was this morning, 8:11 a.m. This article came out, and it really caught my attention from the headline. So the headline reads, "Forget AWS storage." So it's Amazon's storage services, which powers a lot. The NFL uses Amazon storage services and other major companies. So it says, "Forget AWS storage. DPEN storage is the new crypto trend, and it's pumping hard." So that headline alone, I said, okay, you hooked me. I got to read this article now. I got to see, what are you talking about? What is DPEN, and what does this have to do with cryptocurrency? I mean, so basically, DPEN is a decentralized physical infrastructure networks. So they're in vogue. So Filecoin, FIL, it's up 40% this week. It has a lot to do with DPEN. DPEN has been called, quote unquote, the next big frontier, a hot narrative for the bull run, and quote is also shaking up the crypto world. These are all quotes, and I'm at the end of this, I disagree with all of these.
Okay, good,
Right?
because everything you're saying is exactly the reason why I would want nothing to do with it.
Exactly, right? So I disagree with these, but I want to go in and give you some information first. I don't want to just say this is awful. Let's figure out what this is, right? So there's a lot of analysts on this. There's Messasari. They did a report on DPEN. There's over 650 live DPEN projects currently, with a market capitalization over 20 billion and annual recurring revenue of over 15 million. I don't know how you get a
So
market
20
capitalization.
billion.
Yeah, that's
Yeah.
right. Go ahead, say it. You say it.
20 billion market cap. The market is currently valuing this $20 billion with 15 million total revenue. And you have, there is no rational argument here whatsoever for that. And then beyond that, when Fidelity and the other analysts and people who are trying to sell you their services try to sell you that rational market idea, where they're trying to say, oh, you need a professional investor to take care of your business. Because anytime you have an idea that you should buy a company or short it, then other people have already had the idea. Well, it turns out that a lot of people in the market are really dumb.
Yeah. Right. Yes. Yeah. The math isn't math in here. 20 billion market cap with 15 million annual revenue doesn't make sense. Anyways, so they aim to drive revenue through utility rather than speculation. Laughable.
It's the
Um,
I'm sorry. I want to correct myself. It's the efficient market theory.
there
That
you
goes
go.
up against it completely. Go ahead. Sorry.
All right. So, there's been crypto venture capital firms. They've already invested 1 billion collectively in DeepIn. So my problem with these crypto venture capital firms, here's my biggest problem with this. These people who run these firms, they believe firmly that they are the smartest people in the world. Why? Because all the people who run these firms are like Sam Brinkman, in that they got into these cryptocurrencies years ago, and they owned a ton of them, and it made them a lot of money. So now they firmly believe that every move that they make is just as smart as that. And I'm like, you got lucky. You're not making smart decisions with the money you earned off of that investment in those coins years and years and years ago. You're making poor investments with it, and you think you're so smart because you did great with Bitcoin back in the day.
Well, they're really good salesmen. They're really bad investors, but they're really good salesmen. So right now they look like they're good investors, but as Warren Buffett would say, the tide will recede and we'll see who's swimming naked.
Right. So here you go. More into this. What does it actually do, right? What does it actually do? So they generate on-chain revenue through the provision of network resources and services to consumers, developers, and agents. So basically, they're selling their network resources, or they're selling their ability to store information online using a web approach of different systems, is what they're basically doing. A storage services. So Filecoin, the company that's really most attached to this, to DeepN, they've made the most progress integrating real-world Web2 data storage. They launched a virtual machine in 2023 to enable to compute over stored data. So it's going to get their computers are computing, doing normal tasks over stored data, so that you don't lose the stored data. But usage has been slow to grow beyond typical crypto cases. So nobody's using this except for the crypto community. But the recent 40% price pump has come on news that Filecoin would host the history of the Solana blockchain, which has some real world use. Solana blockchain has become like the number 3 cryptocurrency behind Bitcoin and Ethereum. Now, if you're going to host the whole history of Solana, you need a lot of storage. So this would make sense that you're going to use this DeepN network, and Filecoin would be a great cryptocurrency to invest in if this was all going to work out. So Filecoin, arguably DeepN's biggest success story, they've earned a cumulative 23.8 million in fees. So compare that to the protocol's 2.9 billion market cap.
Wow.
So 23 million in fees. So I mean, they're generating revenue, but it's just not a lot here, and it's just not enough to make me want to invest.
Yeah, and here's the great thing about this, me not being so technologically savvy, for example. I don't have to be technologically savvy or even be able to say it right to be able to read a balance sheet. I don't need to know the technological jargon to be able to read a balance sheet. The balance sheet tells me the whole story.
It does, it does. And so I will give this author on Bazinga some credit here. The last couple lines of this article, here's some of the things that they have to say. You ready? Fundamentals do not live up to the valuations, and this is nothing new in this space. Uh, it also says critics like Lyron Shapiro have made the case that DeepN's utility and appeal is wildly exaggerated. But here's the kicker, Brandon. You ready? But that does not mean valuations cannot go higher.
I mean, they always can.
It should, though. It should mean it doesn't go any higher. It should,
Right.
but it's just the state where we're in right now. But like I said, it's nothing new. Buffett saw it back in the day, but now it's more faster. Everything's
Yeah,
faster,
for
and
sure.
so these valuations go skyrocket. It makes headlines like this. People get in, they put their last $1,000 they have in their account that they need to pay rent next month into this thinking it's going to make them $1 million. They lose it, and now they're in money trouble.
I can't remember who it was. I think it might have been Ben Graham that was telling the story of the Great Depression, the stock market crash of 1929, and whoever this was, I can't, like I said, can't remember who it was, but they got out just in time, and he said that his big the big hint that he got that things were getting terribly overvalued and that things were starting to become too much like a casino and such was that he went to go get his shoes shined, and there was a teenage boy that gave him a stock tip.
Yeah, right.
Maybe it's time to exit the markets.
Yes, when that many people are playing it, it must be too
Yeah.
good. And it's funny because we get the most listeners when the market's doing bad, right? Isn't that usually when it happens, when there's a
Yeah, it
big
is.
drop in the market? When everything's doing good, everybody's making money and they don't feel like they need to take advice. But when things are going bad, all of a sudden they're like, well, maybe I should listen to somebody.
Yeah, yeah.
It's
And then also,
crazy how that works.
when I was a little bit younger in my investing career or hobby, whatever you want to call it, I used to, when things weren't going so well in my portfolio, I would go back to Warren Buffett or go back to podcasts of people that I knew that I could trust, and listen to Oak Tree Capital's podcast or to somebody talking about Warren Buffett just to get my mind right again And when I was younger and a little bit more emotionally inclined, and losses would play with my mind a little bit, make me upset or frustrated. Going back to those people and remembering the basics, that's what always calmed me down and brought me back in. So I think hopefully some of the listeners find use in that as well.
Right. All right. So last article here, it was on CNBC, published by Alex Sherman on CNBC. The headline reads, Warner Brothers Discovery is hyping free cash flow, and investors do not appear to be buying it. So what is he talking about? So Warner Brothers Discovery CEO David Zaslav has harped on free cash flow generation, but it's unclear if investors even care. The Warner Brothers Discovery on Friday said it ended the year with $6.2 billion in free cash flow. That's up from 86% a year prior. Pretty good, impressive there, right? Well, the company shares fell 10% on Friday, and they're down about 45% over the past year. And that's because they are not meeting on top line or bottom line numbers. They are paying off debt, and they are creating more free cash flow. So he said last year at this time, he said that would be his focus, and he made it his focus, and he did that. But if you're not growing your revenue and you're not even growing, if you're not hitting your targets on your revenue or your profit, then it doesn't matter if you have free cash flow, Brandon.
No, it's a show me stock at this point. It's one of those, like, you're gonna have to show me that you've changed for the better. Disney was that way. General Electric, which I invested in, at like $70 a share, that was a show me stock as well. The difference between General Electric and Disney and Warner Brothers is that Disney and General Electric had very great, viable, incredible businesses that they were running. They were just terribly mismanaged. And there was a change in leadership. Bob Iger went back to Disney. Larry Culp went back to General Electric. Those things haven't happened at Warner Brothers. And I'm not really sure that a lot of their business is completely sustainable for the future.
Right. And so,
Linear
I mean,
television is dying.
yeah. Well, yeah. And they have the Max streaming service where you can subscribe to. I actually subscribe to Max. But they're not adding tens of millions of Max subscribers, which is what people are looking for. They want
Yeah.
more subscribers. But the CEO Zaslav's argument, what he's saying here is that he needed to get the company's balance sheet in shape first. Now he's going to focus on growth in 2024. And that's a long view to have in this day and age where people want results a little bit quicker. Even Bob Iger, but like you said, Disney actually had good products that are being ran poorly, but he turned around Disney fairly quickly. So should you give Zaslav, should you give the CEO more time, considering he's done what he said he would do, and now he's saying that he's going to focus on growth this year? Brandon, thoughts?
I don't know. I don't know about this one, to be honest with you. Um, Not afraid to admit when I'm out of the loop on it, and I'm out of the loop on Warner Brothers personally.
Gotcha. Well, his bonus was tied to creating free cash flow, so he got paid his bonus because he created the free cash flow, and I think that's a lot to do with it. I think if they're actually going to have a chance this year, they need to make their bonuses tied to actually growth in subscribers,
And
subscriber growth.
just giving it a glance over, they're losing money right now. They're not a
Yeah.
profitable company.
Yeah. Like I said, they did not hit. They lost on top line, bottom line, all over. He's paying off debt and he created free cash flow. That's his two big
Yeah.
wins.
And when I bought into General Electric, they were losing money too. They were. So, I mean, it could turn around for Warner Brothers, but like I said, I just don't see the viability of their current business model. I just don't.
Agreed. All right, man. So that is all I've had. But go ahead with your final thought first, Brandon, and then I'll get into mine.
I really didn't have a final thought lined up. Why we did this show 148 times now. This is the 148th episode, and I don't have a final thought for it other than just read that letter, that 16-page letter. I know it's 16 pages, but it's a great read. And go back and read as many of those letters as you can that Warren Buffett's issued to shareholders. They're always great. They always make you kind of go back to the fundamentals in your investing and your financial lifestyle. And they tell a lot of history too. Here's one. Here's one piece of interesting information that I learned from the shareholder, because this letter is not always boring numbers. It's actually kind of a depressing statistic. So I probably shouldn't share this, but whatever. One person every day, on average, in the United States of America decides to commit suicide by laying in front of a train. Yeah, this podcast just went in a different direction, didn't it? But
Yeah, that's your final thought, really. So yeah. All right.
to relate this back to what he's talking about, it's very hard to get engineers in the railroad industry and railroad workers right now because of the kind of stress that they have to put up with in their jobs.
Gotcha. All right. That's where Buffett was going with that. All right. So my final thought is Palo Alto Networks. Here's why I'm bringing this up right now. Earlier this week, they had bad, horrible guidance going forward, and so they dropped. Right. It's a decent company. I've always looked at them as one to go to outside of CrowdStrike for cybersecurity, and that's an area that's going to continue growth. However, they gave poor guidance going forward. Stock dropped a lot. I went ahead and immediately went ahead and bought and said, "Hey, this went down too far too fast." Within one day, I'd already made 3%, and I sold and got out. I should have held on a little bit longer because the very next day on Friday went up another 5%. So I could have held out and made 8% in just 2 days. The point I'm making is that they had bad guidance going forward. I didn't believe I thought they were oversold. They didn't need to go down that far. My valuation, when you look at the actual fundamental, the numbers, was that it needed to be a little higher off of the low that it dropped to. So I bought and believe in that. When you see these are opportunities to make some good money off of a good, strong company that's been around that just has some bad macroeconomic news. So look out for those. I give that as an example. Palo Alto Networks was the one I chose. Um, I am still holding Tesla. I still believe in that company. I don't know why it's gone down to 191. It should have gone back up now since everybody got the news of the recalls, which was really hidden. I haven't heard anything more about it. You saw it across every headline: 2.2 million cars recalled. But then when they found out it was just a software update, all of a sudden it went dark and nobody knew about the software update, which I find very upsetting because Tesla deserves to be higher than what it is now. So that's just one I'm still holding. So if you're holding it, just hold it with me. I wouldn't buy unless it dips some more, then buy and lower your cost basis. Novo Nordisk, it's still going up for me. That's up now 23%, 24, 25% since I bought it. I'm going to continue to hold that. I firmly believe that's a solid chance to double from when I bought it last year before the end of this year. So still believe that. I'm still saying it.
Okay.
They're doing the right thing. So that's all I'm leaving with.
Here's what I want to say. I'm going to give you a better final thought. All right.
All right, go ahead.
If you are an investor that is into any of that technological, crypto, whatever stuff that Dave was talking about earlier that does things I don't understand, um, give me your information because I would like to sell it to some pre-America agents.
Pre-America, the probably American people. Yeah, right. Oh man, I see those people everywhere. Yeah. All right. There you go. All right. So thank you for listening. As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.